My name's Dave Sutter. I'm the Chief Strategy Officer of a company called TradeIX. We're the primary developer and network operator of Marco Polo, which is a market-wide initiative founded in 2017 by about a dozen financial institutions, along with ourselves and enterprise blockchain provider R3. And the impetus for the founding of Marco Polo was that together with those founding banks and our existing members, we recognize that despite the size and macroeconomic importance of trade and supply chain finance, the industry is facing really deep-seated structural issues. And structural issues, by definition, are issues that can't be solved by one firm in a vacuum. And so structural issues require structural market-wide solutions. And that's exactly what Marco Polo is. So Marco Polo, this is a slide, and I'm going to show you a demo. So this is just a real brief introduction. It provides a distributed ledger-based network that connects key stakeholders in the supply chain, both banks, buyers, suppliers, logistics companies, trade credit insurers, and really any other technology provider that would be of service to those stakeholders. And these entities connect over distributed ledger that drives a convergence of data from the physical supply chain, the informational supply chain, and the financial supply chain, and allows the Marco Polo platform, which is a true API-driven platform upon which business applications are deployed. It allows all of these participants and their platforms and their core systems to exchange data very securely, very seamlessly, very privately, and do that in real time. One of the key differentiators that I want to draw your attention to is that one of the reasons why existing digitization efforts haven't scaled, or in many cases failed wholesale, is that trade is inherently decentralized. And an inherently decentralized business requires decentralized technologies to solve those issues. For example, most platforms operate under the concept of requiring all participants to put all of their data in one single database that's owned and operated by a third party. And for a vast majority of the trade ecosystem, that's not acceptable, either because of regulatory prohibition or requirements that data stay in country, or just legitimate organizational concerns that maybe one third party shouldn't control all of my sensitive financial information. So by being a distributed network, each party, while being seamlessly connected, still has the right and ability to always retain control and custody of its data and deploy this platform and its databases wherever they see fit. And so that's a little bit of an introduction. Just to show you an example, in just 2 short years, we've grown to be the largest and fastest growing distributed trade network in the world. We now have over 30 financial institutions and even more Fortune 500 corporations who are currently working with us on this initiative. And it's a true global initiative spanning North America, South America, Europe, the Middle East, and Asia Pacific. And what I wanted to show you today is an example of just one of the structural issues that we're solving. Because Marco Polo has many different applications and services that already run on it, it's too long of a demo for me to give to you. So I wanted to show you an example of one. And the problem that we were able to solve as a market was that corporates were being forced and basically trapped into all these various different destination platforms and proprietary bank channels, which meant they had to interface with 10, 20, 30, 40 different systems that required 10, 20, 30, 40 different reconciliation processes that were very manual and often paper-based. And so what we actually did is took the Marco Polo application and embedded it directly in an ERP. So the corporate treasurer is able to download a widget, and in this case, I'll show you an Oracle NetSuite instance. They're able to download a widget. The node is automatically spun up and integrated with the ERP database, and then they're able to actually connect and use a multi-bank, multi-product solution with their entire banking group, their entire supplier base, their entire buyer base, directly from their ERP. So what I'm showing you here is actually the ERP's interface. And what's going to happen is the treasurer, the controller, whoever is going to actually create an invoice, just doing business as they normally would, for $216,500. And what they're going to do is actually book this invoice, and it's going to immediately become a unique digital asset, a token, if you will, that's represented on the blockchain. And it's going to be sent across, if the corporate wants it to its banking partners. and analyzed for eligibility criteria. So the bank in their distributed platform has a rules engine that they've configured the characteristics of the assets that they'll consider eligible for financing, their credit limits, their onboarding requirements, their participant rules, and data processing rules. And when the corporate clicks on the receivables discounting widget, that's Marco Polo. So they're immediately be able to access the Marco Polo ERP application directly from within their ERP. And all of the data is continuously reconciled between the system of record and the blockchain-based node. So what you'll see here is that that invoice actually has already been processed by the banks that are involved in providing financing programs to this corporate, and they get a real-time view of how much cash they have eligible for financing. And you see they have $644,798.94 available within this specific program. And so what they're able to do is configure within this rules engine whether they want a completely automated process. So they could say, I want to sell invoices from these debtors between these amounts with these characteristics and these currencies at 9 a.m. every Friday, every other month. I mean, it's a true rules-based scenario engine that gives the treasurer complete control. I'm going to show you a manual process because the fully automated process is a pretty boring demo. It's pretty short. And so what the treasurer is going to do is actually select the invoices for the debtors that they would like to receive financing for. And what happens is they immediately get back from the bank's distributed platform a view of their existing credit limit. So they see their existing credit limit, their facility, their utilization, and how this specific financing transaction would actually impact that credit rating or that limit. And actually what we're going to do is you see that same invoice that came out of the ERP is right there, $216,500. We're going to submit a funding request. What's going to happen is this funding request goes across the blockchain to the bank. The bank's rules engine picks it up, processes it within their rules engine along their eligibility criteria, their decision-making processes, and can choose to either automatically respond or manually respond, maker checker. There's the bazillion different configurations. And they'll, in this case, immediately come back. So this bank is SMBC. This could be single bank, multi-bank program. I gave this demo in Japan, so with one of our big clients, SMBC, so obviously SMBC is up there. And they'll come back with the advance rate, the pricing, the margin, purchase information. And then, again, right from within the ERP, the corporate has the choice to accept the financing offer and then actually choose the bank account to which it wants to be paid. Now that that's accepted, the bank will receive that acceptance. The API, it's a completely API-driven platform, so it calls out to their payments factory, and they'll actually remit the cash to the supplier. Now, this is sort of where it really gets cool, is that all of the interactions that occur in the ERP, trade payments, maturity payments, dilutions, credit memos, it's a real-time reconciliation. So everything that's happening within the system of record is immediately reflected in the blockchain. And so you greatly reduce, if not entirely eliminate, all the reconciliation headaches that you would normally have as a treasurer, controller, or a CFO. And so what this demo is essentially showing you is we're going to make a bunch of different changes to this asset. And this dynamic, fungible digital asset on the blockchain is going to represent all of those changes in real time. So credit memos, payments, partial payments, dilutions, and you'll see at the end that we'll have a completely forensic audit trail on the blockchain of the status of that asset and all the state changes that it went through. So here, what we're doing is you're seeing the treasurer make automated journal entries. So any type of financial activity that's occurring over the Marco Polo network is actually going to be automatically reconciled within the ERP in a very tight and automated manner. And so what we're seeing here is basically a partial payment. Again, customers pay you. So what you'll see is basically, fast forwarding, by the end, you get a completely forensic audit trail of everything that's occurred. And again, this is a multi-product, multi-bank offering. I've just had time to show you receivables discounting. We have risk mitigation products, payables, finance, and the consortium's continuing to build out more and more in a manner similar to Android or iOS. It's an open platform.